Two of the world's biggest tech companies are facing diverging fortunes. Just one day after Facebook parent Meta's valuation fell by a record $237 billion, Amazon is on track to gain almost as much in market value thanks to a nearly 20% stock rally in after-hours trading. That's after the e-commerce giant said its profit doubled from a year earlier to $14.3 billion. The earnings rise comes just as Amazon prepares to hike its Prime subscription prices in the U.S. Amazon's surge bucks a trend seen in the wake of Meta's fall, where a number of tech stocks saw heavy losses. Now let's get more on this from our reporter Rob Watts, who joins me in the studio. So, Rob, we've seen really the big differences in the performances of Facebook, Amazon. What's behind that?
Yeah, it's a real tale of two tech giants. Amazon has got its own problems, problems that are being seen by all sorts of companies, supply chain problems and such. And actually, Amazon is also seeing its growth slowing. It did really well at the height of the pandemic when people were locked in at home and, all they were doing was just ordering offline and getting stuff sent to them. But since people have been out and about, once again, Amazon started to see that slow down. But it's made up for any pitfalls with really good performances in other parts of its business. For example, its ad sales have risen by about a third during the last quarter. What Amazon does is it allows brands to pay extra so that you can see their products first when you search on Amazon's website. It's also seen its cloud computing business do very well. That's grown by 40% during the last quarter, and that's really one of the big engines of new growth for Amazon. It's behind, Netflix's website, McDonald's website. They're all storing their data on Amazon's servers. So that's all making up for the real problems that we're seeing at Amazon in terms of its growth slowing.
So Amazon also is preparing to hike the subscription price for Prime. What is driving that decision?
Well, I mentioned the challenges that Amazon is facing, and it's really trying to spend its way out of those problems. For example, there's a real recruitment squeeze in the United States. Companies are struggling to get people. Amazon's laid its money down and it's been offering signing on bonuses to try and get people to come and work for it. Also, those supply chain problems that I'm talking about mean that delivering goods to people at the sort of pace that people expect from Amazon has been tricky, and it's been spending more on deliveries to try and make up for that problem. And to take on the extra costs that it's facing, it's now looking to its millions of Prime subscribers and it's increasing prices. Just in the United States, an extra $2 a month or an extra $20 per year. And it's hoping by doing that it can start to claw back the extra money that it's having to spend elsewhere. And Amazon's raised its prices before. It raised them 4 years ago, and the 4 years ago before that. It didn't see too big a drop-off in subscriptions as a result of that. And it's hoping that this time, overall, it will pay off.
Well, investors obviously seem quite confident in this strategy, with Amazon basically on track to gain a fortune today. Facebook, other tech companies not doing as well. Does it still make sense to refer to all of these companies as big tech? Is there really a diverging field here?
Well, I think you group big tech at your peril, and I think the fortunes of Meta and Amazon over the past 2 days have really shown that. It's the differences in how they operate that makes the difference, that gives one of them a soaring share price and the other one sees it absolutely plummeting. But we've had another good example of it as well over the past couple of days. So Snap, which owns Snapchat, that messaging service where the message disappears after a certain amount of time. Well, when Facebook posted these disappointing results, or rather Meta did, shares in Snap also took a hit. People thought, well, if it's bad news for Facebook, it's probably bad news for Snap as well, their social media. But then Snap came out with its first ever quarterly profit. And after that, its shares soared by 58% because it's different to Facebook. It isn't Facebook. So in all the areas where Facebook's struggling, Snap is seeing its users grow. It's also not getting the TikTok effect that Facebook's getting, particularly in India, where TikTok, is banned. Snap is growing really fast. So that's an example of how you can't group even social media together. And so you certainly can't group all big tech.
That's Rob Watts from DW Business. Thank you so much for being here.